Kunal, they say in life nothing goes one way excepting age. So S&P 500 has gone too much, and now it is time to play for the bounce.
Correct.
Rather than focus on the weakness.
Correct. Absolutely, Nikunj. And in fact, the price charts, so it's not just about the price chart, but we look at more emphasis on the indicators. Now, on the charts which you can see over here, the top grid is the S&P 500 chart. The lower grid is actually the percentage market breadth.
Okay, so upper one is the S&P.
S&P 500.
That's just the movement.
Just the price movement.
Okay.
That's the feeler of how the prices have moved up. But the lower grid is the most important one.
Okay.
That's an indication of how the market breadth has shaped up.
Okay.
Now, what do you mean by market breadth? If the market breadth, if there is an extreme amount of selling, which means the extent of market breadth, which are above their 200 moving averages over there, reduces dramatically. And that's a zone where we call it as an oversold territory. Where the
So
market
it's a bombed
breadth
out space.
It's an extremely bombed out space. And
Everybody's on the same side of the board.
exactly. So at that time, having a contrarian view is always rewarding. Okay. Now, if you can see the data point, and I've mapped up over the last 6-7 years of the chart patterns, that the lower grid, when the indicators I've marked it with the circles, whenever it has hit those circle points, which is an extremely oversold territory, we've seen a V-shaped recovery on the S&P 500.
How much has this indicator worked in the past? I mean, with technical analysis also, nothing is 100%.
Correct.
What has been the success of this kind of an historical pattern when you've mapped it in the past?
So it's as high as 90% plus.
Okay. So based on your analysis, if S&P 500 recovers, then obviously the other overbought market, the dollar index,
Exactly.
or the good old dollar has to come down.
Exactly.
It's like a seesaw, right?
And exactly that's where the dollar index is positioned. So it's very rare that you have two asset classes which are not exactly correlated to themselves, but they are positioned at extreme ends for themselves. S&P 500 we discussed oversold. Look at the dollar index chart. Now this is the indicator. The top grid is the indicator. The red line which I have marked is a major resistance point for indicators. Like it's the zone where it's like your car which is all driving at a speed of 180 to 200. Now you know that the car is not going to last for, the speed is not going to last for too long, and whenever that retraces, it's going to be a sharp screech or a sharp retracement which happens into...
But Kunal, why now? Why did you not make this call at 110? Why are you making this call when the dollar index is at 115? Because at 110 also, the dollar index was stretched. At 110 also, the S&P had got into some kind of an, turbulence. Why now? Why not 2 weeks earlier?
I think exactly, very good point, Nikunj. But the reason why I've picked it up this time is because the indicators are at a multi-year high.
Okay.
Which was not the case when dollar index was at 110. So if you can look at the current positioning of the dollar index has come back to a very high point on the indicators. This is the zone. So this arrow which I have marked up is the line. Exactly. This is the point which marks up extreme overbought nature on dollar index. So it's just a matter of time that you should probably see a sharp cool off in dollar index as well.
Let's look at the dollar chart also independently. We look at that. But Kunal, what could challenge this thesis? Because what we are talking about here is we are talking about two of the most crowded trades in the world, which is short S&P and long dollar, perhaps reversing. Now mathematically we can prove it, but what could be the challenger for this trade? I mean, what would be that stop loss beyond you would say, this is not what I anticipated. It's a different and extraordinary world. Strange things are happening. What could challenge your thesis?
See, I'll give us a bit of a different example. It exactly happened with crude as well. So at 130 odd, we identified that crude is at an overbought territory. Now it shot up to 140, but it could not last for that long. So at 130 to 140, the speed was very high. There was an appreciation of $10, but then the reversal was very sharp. That's exactly the point which I'm highlighting for dollar index and the reversal for S&P 500.
So what happens to rupee then? Rupee also should strengthen?
It should.